Welcome to FXcast. This is our market analysis for Wednesday, July 6th. In each of our videos, we try to come up with high probability trading setups. We'll look at gold and compare it to some of the popular currency pairs. We'll come up with a low volatility watch list, an inside bar watch list, and we'll review the economic calendar to see what could affect our future and open trades. As always, please send your comments and feedback to analysis@fxcast.com. Let's pull up the charts. As always, we're going to start off with the gold chart, and we can see what we referenced yesterday, which was buyers finding value at the 1475. We got a little inside bar here on the light volume of Monday, and now we've rushed our way right back up to our what was once support, now is resistance of about 1510, and we're stopping at the 20 moving average. So there are two things to watch here. First of all, we're now in a new auction area, so will we break through the 20 moving average and move all the way back up? We'll certainly have to see. Also, as we look at the volume, we did get an increase on volume, but we can still see that there's a little parity here between the selling and the buying volume. Would like to see it get back up to what has been average for the past couple days. So we had this big move up on lighter volume. So what we have to watch for is two things. Whether we're going to move through, and we come over to our hourly, and we can see volume, our point of control at 1508. That's where the most volume was over the past day. And we can see that we're overbought. So there is an argument that as we hit this daily resistance, there is an argument for our hourly charts to move their way back on down and either confirm that we're going to stay in this auction area or we're going to move higher. As we move over and see the relationship with gold and the dollar, with if the gold is moving up, then the dollar is moving down, and we can see two things. We'll see in all of our currency pairs on our hourly charts, we'll see a flight back to parity, meaning most of our pairs, which were once away from our long-term moving average, today made their way back to that moving average. And thus we can still see the whippiness. Look at the whippiness on the daily of, yes, we're moving up, but it's just been so up and down and whippy. And then again, even though the sellers are in control as far as what volume is winning, but we can see the past 4 days here are much less volume when compared to some of our bigger moves. Again, as we come to the hourly, we can see on the pound dollar that we have come back to a long-term moving average. We have come back to parity, meaning we're in a neutral zone, not in a buy zone, not in a sell zone. And we still see the same thing. Our divergence with the dollar and the pound is getting greater, so we can see that the dollar is in control as it hooks back up, and the pound sort of hooks back down. And we can see that maybe there's a buy going to be setting up here, but it's not there now. So since we're already close to parity, our long-term moving average, we're in a neutral zone. This gives us an opportunity to sit and wait before we make a move on the pound dollar. As we switch to the euro dollar, we can see something very similar. Again, we saw a return back to parity. Now the difference here is that we are just fractionally below, but still in a neutral zone. So we'll come back over to our daily chart to get a gauge of what's going on here. And we're seeing, yet again, more light volume. So the theme of today is a return to parity and lighter volume. Sellers are still in control. We can see that although our light volume Monday, when half the market wasn't here, did pop above our downtrend line, you can see that the sellers came right back in today and said, no, we must return it back down. So are we going to break through some daily support here on the euro dollar? Well, we can see here that the dollar has taken control, which has brought us back down, but we're starting to see the euro hook back up here. So as the euro hooks back up here, we may anticipate seeing some sideways action after you can see we got a buy signal here. So we may see a little sideways action, but remember the dollar is above zero, so therefore it's still in control, which is going to allow this to move lower. So we'll need to see a little more weakness in the euro to get this continuation all the way back down to 1.4. Finally, we have the dollar Canadian. And of course, we're watching a long-term downtrend. We were watching if we were going to make a flight up to the 50-moving average or return back down and test 8,300 again. Our theme remains the same. Light volume, seller volume is in control. So all three of our major pairs, we still saw light volume, and we still saw the seller volume still being in control. We did see a little spike with the dollar today with the Moody's downgrading the Portugal debt. But here's the other thing that we see today on our hourly charts. The volume, the price action returns back to parity. So we're back to the long-term moving average. We're back to a neutral zone. However, the one difference that we see here is we can see that the Swiss really spiked up. So the Swiss took control, which allowed for our price action to move lower as the Swiss took control. They're both above zero though, so we'll see if this bounce that we saw here will bring us back up to at least a sell zone that we can take action on. But what we're seeing on all three pairs are a move back to the neutral zone, a move back to our long-term moving average, and so we're going to have to let price action tell us where we want to go for tomorrow. Right now, for our low volatility watch list, we're going to be watching the pound dollar. And for our inside bar watch list, we do not have any at the current time. Let's go to the economic calendar and see what could affect our trades tomorrow. As we go to our economic calendar, there's some things that should really jump out. We have a lot of jobs data for Wednesday. We have GDP for the European Union, so that certainly can move the market. And then we come down to, we have the Challenger job cut, which can move the market, but more importantly for the States, we have ADP. And this can be a leading indicator to Friday's employment situation. And we have another employment situation down here with the Aussie. So we have a lot of jobs data coming out tomorrow, and we have New Zealand with GDP. So we have a couple GDPs, and we have several jobs data that will definitely impact the market. We would like to thank you for watching our FXcast market analysis. As we continue to improve and make adjustments so that you're getting value from our videos, we want you to take the time to give us feedback, give us comments, send us questions about what you would like to see in our videos, and you can send those comments and feedbacks to analysis@fxcast.com, or you can post to our daily forum. Thanks guys, and I'll see you next time.